Hi.
Hi.
Here we are again. Thanks for coming by our video blog. This week we're here with the beautiful Evangeline Scott again with Partners Mortgage. You know, we've this time of year we always look forward to what's going on at the beginning of 2015. Mm-hmm. We all know that I would say it's slow as far as the turnover. Whatever we think about right now, things that we're doing right now seems like it'll show up the first part of the year. So tell us some of the things that are changing in your, in the lending world that you see there.
Well, from a lending perspective, I'd probably say one of the biggest, and not necessarily a change, but a surprise, is interest rates. So most people, everybody, thought that this time of the year, based on where we were at the beginning and even end of last year, that interest rates would be higher. And interest rates, even as of today, you could be in the high threes on a 30-year fixed. The Dow was down in excess of 300 points today, which of course, unfortunately, in my world, when your retirement plan is not doing so well, typically the interest rates oftentimes are improving a little bit. So that's probably been one of the biggest surprises. So I think we're seeing a shift, and what I'm recommending to people is we have a lot of folks that we're just kind of coming into the end of the year going, and this is where they kind of take that step back and kind of check out in regards to real estate. Yeah. And I think a lot of people are looking at going, I want to take advantage of this from an interest rate perspective, and there is still activity. So if I have a house that I still want to sell, call forth, right, and look at the aspect of, is there still another property that I want to buy versus waiting and going into what most people think of spring.
Well, we know because we know what we're looking at right now. We don't know what's going to be coming in the future for sure.
Right.
But that's one. How many years have they been telling us that rates have to come up? They have to go up. They have to go up.
For the solid last year, and they did throughout the year, and they've just made some adjustments and some nice creeps down. Unfortunately, you're never going to have that crystal ball to think about, bombs or issues, across the seas that, oftentimes it's those kind of unfortunate things as well that affect and rock the stock market a little bit, right, that then, move and assist in moving interest rates. One of the other biggest things that we were talking about that I know you were really excited about this year, Fannie Mae made the adjustment to where it used to be 2 years with 20% down after a short sale and you could repurchase a home. They've now changed that to 4 years, and that knocks a lot of people out of the market because
buyers that we were working with at the time.
Absolutely, because FHA, their standard time frame is 3 years. So I can do a loan now for somebody where I have an investor comes in, investor relationship. We set that purchase price very similar to what somebody would think of as a lease option. Right. You go in, represent the buyer and the investor, all cash going in, and then we go ahead and pop in an agreement for them to be able to purchase the home as well. So for those folks that they do want to be able to move, and maybe they have a particular house. I had one client that had a particular house that they just loved that house in that neighborhood, right, with schools and all that kind of stuff. It can be tough. So that's a great opportunity to reach out to Forth about as well.
That's a cool program. And that's something that I've heard people talk about that program for a long time, but I've never known anybody that actually did it. And especially on a big scale like your programs. Yeah, that's really cool.
And that's with as little as 5% down payment.
Right.
So that's a big difference. So for those folks that maybe they didn't have the 20% down, and this is a possible option, you can then get into the house. You have that aspect of the equity increasing over the amount of time until you're
Plus you've got it tied up. You're going to buy
absolutely.
it, so you can go ahead and make do the things that you want to do to
absolutely.
It. It's like it's your home,
Yeah.
It's an awesome program, and I was surprised to hear how lax, for no other way to say it, the qualification terms.
Debt ratios up to 50%. For self-employed borrowers, we'll look at bank statements as well. So it's a really good program at a time when we really need it with that adjustment that was made.
Right. That's a good segue into what I want to talk about was just supply and demand basically. Just the market is always, every market is driven by supply and demand, and this time of year typically we see less buyers and less sellers. Well, now we're seeing more and more sellers. Not as many buyers on the market, and that's just seasonal, right? Most of the time people want to make the move in the summertime.
But again, that speaks to take the advantage.
Exactly. That's exactly what I was going to say. Because because there is less competition, you can get a better deal, and there's more homes to choose from.
Absolutely.
If you just want to look at the graph, these are the homes that are available. These are the homes that have sold. So, and these are actually homes that have sold. The red line represents homes that are going into escrow. So, and this is the whole Sacramento area. And every area, every little town or every little multi-area is kind of the same thing. Everywhere you look, there's more homes on the market, and it's awesome time to be buying.
Yeah.
And even what it does for sellers, it makes it even more critical to condition their property correctly, price it correctly. Have a professional helping you get the thing ready. And,
Well, most people will always say the best time to buy, because they think of it from a value perspective of can they get something
right.
at more of a value is during the fall and winter time.
Right, just because of what I'm saying.
Yeah,
exactly.
absolutely.
And it's just like, because the human nature, I guess, is when the market's going down, the stock market's going down, are we selling? It's kind of like that, right? Yeah, it doesn't really make any sense, but that's just how it is. Thank you for coming by. If you have any questions about any things we've talked about, please give us a call. 4th Hoyt. You can email me at 4th@thehoytgroup.com, or call me or text me at 916-316-3810. I get a hold of Evangeline.
Yep, Evangeline Scott, Partners Mortgage, 916-496-0160.
Awesome. Thanks so much. Thanks for coming by.